Joined by Girija Shankar Ray, a research analyst at Nirmal Bang, to talk to us a little bit about what's playing out in the cement space to try and understand that landscape better. Because we've seen, some stocks start to move, and the kind of commentary that Nuvoco gave as well seems to have enthused the street a little bit. Girija, let me start with Nuvoco and what that indicates from a sector standpoint. How do you look at the numbers and what do you make of the commentary?
See, the numbers were actually, very good, even though top line was, in line with the street estimate. But if you talk about their EBITDA, uh, it beat the market estimate. It's like street was, it's around 16% higher than your street estimate, I can say. So they have delivered a very strong EBITDA for this quarter. See, the thing is that is mainly because of their higher realizations. In fact, volume also supported. So over the years, if you talk about the Nuvoco's volume growth or utilization rate, significantly it has improved. And recently they have commissioned their 2.2 million ton of capacity, which was about to start in quarter three FY27 and 1Q FY28. The expansion they have started a bit earlier than the time frame. So that is a positive thing, and I believe this newly commissioned capacity that is going to give the volume addition to the overall volume picture. So you can expect a volume of around 24 million tons by FY28, 22 million tons by FY27. So Nuvoco, I believe the volume realizations and the strong cost efficiency that is going to improve their overall profitability.
And what does this indicate? All of this, what does it indicate from a cement standpoint or an industry standpoint? Also a geography standpoint. Give us a sense of that, because cement is very much a geographic kind of business, especially from a realizations perspective.
Yes. See, I'll cover three things. One is demand, one is second one will be your pricing, and third one will be your cost efficiency level. Okay. So demand, what I believe, you have a pent up demand in your, FY25 and 26. In fact, if you talk about FY25, the year on year demand was around 2.5% or 3%. So there is a pent up demand in FY25, and in fact, FY26 we saw a little bit of subdued in volume. So this pent up demand is going to come by second half of FY27, and FY28 will be very good for the cement industry, because post that again election will be in FY29 you can expect this pre-general election. So I can expect some kind of pre-general election kind of demand boom from FY28 onwards. Very much of demand you can see in FY28. But FY27, second half of FY27, you will see demand pick up in the industry. That is first thing about the demand. Coming back to the pricing, see what happened from we did a channel check, and what we found for over first quarter of FY27, only 15 rupees kind of price hike has happened. That is into April month. May and June there was no price hike at all. So if you compare first quarter and fourth quarter of FY26 and first quarter of FY27, there is a price hike of around 4% a quarter on quarter basis. So that translates into 15 rupees per bag. But highest price hike was happened in your eastern regions, followed by north region, south, central, south, and west. So this is how it does. So overall, you can say highest price hike was happened in your eastern region. So the regional players will be having the very good benefit because of this price hike in first quarter FY27. So, but I do not see any meaningful or any significant price hike, because there are a lot of competition in the market, and large players are actually dominating, and most of the large players are trying to sell a lot of volumes in the market. So there will be a kind of a pressure will be there from the large players, which will ultimately will not take the price to that level what street is expecting. But to be honest, I'll tell you, the price at this moment the price is in a threshold. From here there is no point of correcting this price, and I don't think so there will be any correction from this price. If there is any price hike, it will be marginal price hike, but I cannot see any kind of significant price hike like 40 rupees, 50 rupees per bag. Although there is a cost, elevated fuel cost, power and fuel cost related recently, because of geopolitical issues, your petcoke petcoke price has increased, diesel price has also increased, packaging cost has increased. So altogether, all these cost has increased. To absorb that cost, the price hike has taken. But again, I'll tell you, the all India price hike of this 15 rupees is not sufficient enough to absorb the full cost impact. So again, one more point I want to add it here. So there, always we have seen the industry, there was a pre-monsoon price hike, but this time there is no pre-monsoon price hike. So whichever the price hike is going to happen, I believe that will be post your, kind of, second half of the year FY27s.
Yeah, what is the kind of realization gains that could come in Q1 and maybe Q2, given the fact that you just said that the cost increases would have been offset by the price increase, and there hasn't been one price increase before the pre-monsoon. What kind of realizations are we looking at for many of the companies, whether it's Ambuja, Ultratech, or Nuvoco?
See, based on this price hike, the realization will be good. I can say the realization will be good, but at the end, the cost, higher cost. So this is going to impact the EBITDA per ton. So overall, for the industry, we are, we see a EBITDA per ton of 1,000 kind of level
For
in 1Q FY27.
yeah, for Ambuja and Nuvoco, I mean, is it going to be a better EBITDA per ton realizations coming in this quarter?
See, our topics are like, Ambuja, then Villa Cup, Nuvoco, and JK Lakshmi. So we believe these are the companies that are going to do well, despite having this elevated cost and the kind of volume pressures also in the industry. See, generally what happened, fourth quarter is always a volume driven quarter, and first quarter is always a price driven quarter. So this price hike is just mainly to absorb the full cost impact of the elevated energy cost, packaging cost, and diesel prices. So that is what I'm saying. Like, this quarter you will see a little bit of subdued in volume, but yes, the quarterly first quarter FY27 volume will be relatively better than your first quarter FY26 volume.
Girija, thank you very much for joining us and giving us this perspective on the cement situation, especially from a price and volume point of view in Q1. Thank you very
Thank
much.
you.